Banking Law and Practice. Chapter 3, Customers and Account Holders. Part 2. Riaz Notes. 1. Procedure for opening a bank account. Step 1. Fill the application form with your name, address, occupation, and specimen signature. Step 2. Introduction. Get introduced by an existing account holder or show valid ID like passport or Aadhaar. Step 3. Specimen signature. Sign on the application form and also on a separate card with your passport-size photo pasted on it. Pay-in slip. Deposit the initial amount at the cash counter using a printed pay-in slip. Passbook. The bank issues a passbook to record all future deposits and withdrawals. Checkbook. Request a checkbook separately if you want to make payments from your account. Special account holders. Introduction. Meaning, banks open accounts not just for regular adults, but also for companies, minors, lunatics, firms, and institutions. These are called special customers. In simple words, some customers have legal limitations. A minor cannot sign contracts. A company needs board resolutions. A lunatic cannot be held liable. The banker must know these rules. How it works. For each special customer type, the banker follows specific rules before opening or operating the account. Failure to follow them can result in legal loss for the bank. Example: a bank cannot give an overdraft to a minor because any contract with a minor is void from the very beginning under Indian law. Sole proprietorship. Meaning, a business owned and run by a single person. It is not registered under the Companies Act. KYC norms. RBI mandates KYC compliance. Banker must verify name, address, and business activity of the proprietor. Primary proof. GST certificate, trade license, or any government-issued certificate in the firm's name. Secondary proof. Any registration document from central or state government in the proprietorship's name. Identity proof. PAN card is mandatory. +1 of passport, voter ID, Aadhaar, or driving license. Address proof. Utility bills not older than 3 months, bank statement, or a registered lease agreement. Partnership firms. Meaning 2 or more persons sharing profits of a business. Max 10 partners for banks, 20 for others. IPA 1932. Registration. Not compulsory, but an unregistered firm cannot file a suit in court to enforce its rights. Account opening. Banker examines the partnership deed to understand each partner's authority before opening the account. Consent required. Written consent of all partners is needed, naming who will operate the account. Advances. Banker must get signatures of all partners for loans, making them jointly and severally liable. Key events on admission, retirement, death, or insolvency of a partner. Close old account. Open a fresh one to avoid Clayton's case. Joint stock companies, public limited. Meaning, a company under Companies Act 2013 with a separate legal identity, perpetual succession, and a common seal. Documents. Certificate of Incorporation, MA, AOA, and Certificate to Commence Business are all required. Board resolution. Banker must get a resolution naming persons authorized to sign checks and operate the account. Borrowing limit. Directors can borrow only up to paid-up capital plus free reserves. Sector 293, Companies Act. Charge registration. Any charge on property must be registered within 30 days, or the security becomes void. Liquidation. On receiving a liquidation notice, banker must immediately stop all account operations. Private limited companies and OPC. Private company. Members have unlimited liability. Banker checks Certificate of Incorporation. No commence business certificate needed. Converted firms. If earlier a proprietorship or partnership, banker must check for prior charges on the company's property. One-person company. A private company with a single member and shareholder, registered under Companies Act 2013. OPC account type. OPC accounts are opened as current accounts. All rules of private companies apply. OPC documents. Certificate of Incorporation, PAN, MA, AOA, Board Resolution, and Form Inc. 3 for nominee. OPC facilities. OPC accounts are eligible for all loan types, including overdraft facility. Illiterate persons. Account type. Banks may open deposit accounts, except current accounts, for illiterate persons at their discretion. Personal visit. The person must visit the bank in person with a witness known to both the bank and the depositor. No checkbook. Checkbook facility is not provided. Withdrawals are done only via a withdrawal form. Thumb impression. At withdrawal, the account holder gives a thumb impression before an authorized bank officer. Officer's duty. Bank officer must verify the person's identity and explain all terms in a language they can understand. Passbook safety. The bank must explain the importance of keeping the passbook safe and secure at all times. Minor's legal position. Definition: a minor is any person below 18 years or 21 if a court-appointed guardian manages their property. Void contract. Any contract with a minor is void from the very beginning, void ab initio, unenforceable in court. Loan recovery. Money given to a minor as a loan cannot be recovered even after they turn 18 and become an adult. Surety invalid. Even if a surety is given for a minor's loan, the surety cannot be sued if the minor refuses to pay. No pledge. A minor cannot pledge or mortgage property. Any security held against a minor's loan has no legal value. No guarantee. A guarantee given by a minor for anyone else's loan is completely invalid under Indian law. Minors and bank accounts. Account opening. Banks can open savings and current accounts in a minor's name under Section 26 of the NI Act. No overdraft. Overdraft facility cannot be given to a minor. The account must always stay in credit balance. Guardian account. A minor's account can also be opened and operated by their natural or legal guardian. Age of discretion. Banks typically allow independent account operation for minors aged 12 and above. On attaining majority, when the minor turns 18, the banker collects a written confirmation letter to continue the account. Minor as partner. A minor can join a partnership firm only for sharing profits, not for managing or signing on behalf of the firm. Joint account holders. Meaning, an account held by two or more persons. Clear written instructions from all holders on operation are mandatory. Withdrawal. Specify clearly. Either or survivor, anyone can operate, or former or survivor, first named operates. Insolvency. If one holder is declared insolvent, banker stops operations until the official receiver gives joint direction. Nomination. Under Sector 45ZA of Banking Regulation Act, joint holders can nominate one person to receive funds on death of all. Overdraft. Banker must ensure joint and several liability is established before allowing overdraft on a joint account. Death. On death of one holder, the survivor gets full control as per the survivorship clause in the account agreement. Clubs and associations. Nature. Clubs, schools, and associations are registered social institutions with their own rules and bylaws. Resolution. Banker needs a resolution appointing the bank and another naming who will operate the account. Advances. For any loan or overdraft, proper security must be obtained. Personal guarantee of office bearers is preferred. Unregistered clubs, extra care is needed. Management must be personally bound for any loan granted to the club. Change of officials. When authorized persons change, banker must stop operations until a fresh resolution is received. No mixing of funds. Club account must be kept completely separate from the personal account of any authorized person. Hindu undivided family, HUF. Meaning, an undivided family of Hindu, Sikh, or Jain males from a common ancestor who carry on family business together. Karta, senior male member who manages the business with unlimited liability. Other copartners have limited liability. Account opening. Banker must collect names of all major and minor copartners and a declaration from the Karta. Purpose of loan. Banker must confirm the loan is for genuine JHF business. Loans for Karta's personal use don't bind the family. Loan documents. The loan must be signed by both Karta and copartners to establish full liability for repayment. New business. If Karta starts a new family business, copartners are liable for related debts to the extent of their share. Executors and administrators. Executor. A person named in a will to manage the deceased's property. Administrator is court-appointed when no executor is named. Documents: banker must insist on a letter of probate or a letter of administration from court before operating any account. Stop operations: immediately on receiving news of the testator's death, banker must stop the operation of the deceased's account. No personal transfer: funds must not be transferred to the executor's personal account. Such checks must not be honored. Borrowing: executor can borrow only in personal capacity. Deceased's property cannot secure the loan unless the will allows it. Death of executor: if an executor becomes insane, operations stop. Fresh mandate from remaining executors is needed to continue. That's all for Part 2. Watch Part 3 for the rest of the chapter. Part 3 covers trustees, lunatics, insolvents, married women, government accounts, NRI accounts, pension. Like, share, subscribe to Ria's Notes.